Let's see how this works. Here we go. Cool. Mm, Joins, they can shoot me a message. Um, all right. If anybody's in here listening, if not, I'm talking to myself. But for right now, just gonna see. Turn this notifications on real quick. Um, all right. If anybody's in here listening, if not, I'm talking to myself. But for right now, just gonna do some live charting. So I think it'll be cool. It's something different. Um, and yeah, so let's see how this goes. All right. Um, all right, let's see how this goes. This is just kind of a test run. Sorry, but we're gonna give it a shot here. All right, I'm gonna share. I'm gonna come over here to my chart. All right, so I'm gonna back test it myself here and see. Um, you don't hear anything? No way. Hold on. Any better? Let's see. The mic should be on. Where's the volume? No volume? Really? There's no volume at all. Nobody can hear me. If it's a fail, it's a fail. But let's see. Be on. Where's the volume? I can hear this from my phone when I have it streaming. No volume? Really? There's no volume at all. No one can hear me. I'm hearing myself right now. What? Come on, somebody bless me. It's a fail. It's a fail. But let's see. Where's the volume? I can hear this from my phone when I have it streaming. It's echoing right now. All right, let. Oh, it's working. Yeah, I turned it on my phone and it started working. All right, sorry. That was I again, this is the first time I'm doing this, so we'll you know take it as we go. But all right, so I'm just gonna go through some charts like I typically would, but I wanted to try something different and see if this would be a cool little thing to do now that we can live stream here on Twitter. But I'm just gonna kind of go through my routine, what I would do normally, and then if anybody has any tickers or anything like that, I would say comment on here, but I don't think I'm gonna be able to see them because I'm sharing my screen. So that's a problem. Maybe if I throw something on the monitor. You know what? If you want me to chart something in particular and you're listening, just drop a comment under this live charting thing that I have opened right now. All right. All right. So we'll start off as we normally would with NASDAQ. Thankfully, most of this is already taken care of right now. But um, ultimately, obviously, today was a little bit choppy. Monday as well. Even going back to last Friday was pretty choppy as well. So, not too many clear-cut answers at this point, but to me, nothing has changed structurally. So, to me, my target is still right up here to complete what would be the Mando model or the model that I use to trade. If you haven't heard of it yet, I'll show you guys throughout tonight, but also the videos on YouTube, so you can totally check it out there and just see, I guess, the process that I go through and how I trade. And I know we're looking at a weekly right now, but this will work on a daily time frame, 5-minute time frame, 1-minute time frame, you name it. It is just a staple of the algorithm that's delivering price. So anyways, just to check this out really quick, you'll notice I have these little fibs mapped out, and I don't trade using the fibs, but I do use them to map a range, right? So you might say, okay, why would you have your fib set up right here? And the reason I have my fib set up right here is you'll notice what was the move that took out this high right here. and that move being from this low up to that high. So from this point, you'll notice that we then have a retracement back down into discount of the range back to 50%. And if we were to, go back into Twitter and, I'm going to do it anyways. What chart was it on? It's over here. I'll just show you where I had mentioned this because to me it was a pretty nice low that we could use to uh, I guess use as our guideline for price moving forward. Um, so you'll see my tweet and the explanation as to why um, I thought this, but here it is. I just used it on this one because I don't have as many lines and stuff. So uh, the tweets should pop up here in a second. There they are. Okay. So you'll notice at that low that we made, I like this low a lot. Golden pocket bullish imbalance, specifically 50% of it. Test on the daily bounce after taking out the swing low from 525. I like, and obviously we're well above that now, but you'll also see after we took out that level, I had said I want to see price sweep 15,684. Um, but the reason, again, and this goes all back to my model in itself, is I like to see a market structure shift or a bullish trend, bearish trend, you name it, but a defined trend. How can we define this trend? Well, let's look to our left. Have we taken out a high or a low in the process? Well, right here we have a high that was taken out with this price run. Okay, I don't use the whole one because I'm focused here. This is what I'm using as a bullish as well. Different setup for a different time, but there would be your retracement back down into the bullish breaker. I mean, look, even if I were to drag this down, we would still be in discount of this price run. So, nonetheless, we bounce off of that level and we're making a run back towards the highs, and that is where my expectation is for the model to complete. Now we're very close. Obviously, price has slowed down a little bit, but to me, nothing has changed here still, even despite this choppy behavior. I'm still anticipating a reach for that 16,257. Now it's less than 200 points away at this point. So it's hard for me to say, oh, yeah, I am bullish. I just think we're going to get there. And from that point, I believe that we're going to sweep above that high. And from there, I actually do think we're going to retrace, and the retracement could be pretty deep. And the reason why I say the retracement could be pretty deep is because you'll notice that from that low that we made, and if we were to take out that high, I'd have new fib set, and I already do kind of, right? Now, with that being said, it looks like this at the moment. With that being said, when we take out higher time frame liquidity, swing highs and swing lows, right? When we take out liquidity, my expectation would be that you're obviously, and everybody would say this, but you're either going to get one of two things. You're either going to get some sort of imbalance up and a continuation or a breakout, or you're going to reach just above that, sweep those that high, take out those stops, raid stops, gather liquidity, gather money so that the next move can come through and reject and start to head lower. Now, the reason why I say that I think this retracement could be pretty deep is because this range is pretty damn big. I mean, we went from 14,140, and by the finish of where I anticipate price to go, that's 2,000 points. So that's a pretty big range. So if we're looking at for a discount retracement following that, that's immediately 1,000 points lower. So that's just what I'm anticipating. Again, I could be totally wrong. If we are to make an imbalance up and through, that will absolutely change everything at that point for me. So, um, you know, uh, from this point on, I guess you could say I'm a little cautious. I really would like to see that high get swept prior to moving. Now I'll just use an example of something that might be, I guess, front running, if you will, what I'm expecting on Nasdaq, and this is the exact expectation for me. It's something that just occurred on Nvidia. So Nvidia model played out, but since we took out that new high, I now have a new range set. So after sweeping that high, look what we did. We just barely ticked over it, right? All that it takes. Sweep the high, and then we start to retrace down into discount. So I am anticipating Nvidia to start to make its way lower. And this is not the only name that I'm anticipating this on. There's actually quite a few. that I think we're going to get this type of move on. And just the really the first being Nvidia is one of them that swept the high. Microsoft is already at all-time highs, and that's a situation where we took out a higher time frame pool of liquidity, and we actually made an imbalance up and through it. So this is what I'm saying, and in terms of what we could possibly see on Nasdaq, not something I anticipate, but absolutely possible. So if we look at it right here on Microsoft, here it is. We took out that all-time high or higher time frame liquidity with a bullish imbalance. So the fact that we did take out that higher time frame high with that bullish imbalance, to me, that's just the market tipping its hand and telling me, okay, this is a situation where you could see continuation rather than what we saw on Nvidia. I'll go back to it just for reference, but um, the other situation is like what we're getting here on Nvidia, where we sweep that high and then we almost immediately pull back down to go and fill some inefficiencies down below, some of our imbalances. So, as I go through tonight, there are some names where I think, there's like NASDAQ or the QQQ. If you don't trade futures, that's okay. QQQ, that's another symbol that you can use as a, that will mirror NASDAQ's moves. But, I'm obviously trading futures, so I'm looking at it from that perspective. But as someone who trades essentially solely indices, now I do have a trade open on something that's not an index, which doesn't happen very often, but I am doing it right now with Tesla. um, but when I look at uh, the index as a whole, whether that's SPY, whether that's the Qs, I think it's important to have an idea of some of the bigger or more or heavily weighted names within that index that I can use to my advantage. So if I'm looking through and I see, okay, Apple has, I think Apple has a little more room. I think, Tesla's got a ton of room. I think Google is just about done. I think Amazon's done. I think Nvidia is done. I think Microsoft's done. Then I can look to play things that have relative strength, or I see that there's a potential for higher prices at a specific point. And how would I come to terms, and how would I think, or even use that as an idea? Well, did we sweep the higher time frame liquidity? If we didn't, then I'm going to be in the camp that I think we still can. And again, as we go through with some of these examples, you'll see what I'm talking about. So we'll go to Apple first. And again, if anybody has anything they want to look at, feel free to shoot me a message. I'm also just gonna look in the Discord really quick and see, um, make sure we're still good, because again, I feel like I'm just talking to myself right now, and I don't know how well that's gonna shake out here. But in the meantime, if I know Sean, you were listening. If you're listening still, just shoot me a message, and just so I know that we're still rolling here. But let's take a look at Apple first. So Apple, interesting enough, that was one of the names where I do think it has a little bit more space, and that little bit more space should, in turn, actually help out with that final little push on Nasdaq to get us to that target that I envisioned a couple weeks ago. So 2 weeks ago, actually. But here's something that's interesting on Apple, and something that I'm going to keep my eyes peeled on going forward. So right off the bat, we have again that little Mando model set up. Why would I use this low to this high? Well, let's take a look. What was the price run that took out this swing high? And it was this low to that high. So right off the bat, right, why would I not use the low down here? Well, we made another high here that wasn't the high that took out the swing high. So to me, I want to be a little more precise, and you're going to see some precision here. Um, that by using the correct price run that took out that high, it will be much more precise, and I guess you could say um, less wiggle room, if you will. So let's look. We set the high. Um, oh, I just saw your message, Ivan. All right, so we go low to high, taking out this swing high in the process. We have a bullish market structure or bullish trend. Price finally does find some sort of resistance, right? If we were to go left, I'm sure we can, maybe find something or a reason as to why price rejected here, because every move that occurs on any chart, I feel like I can give you somewhat of an explanation as to why it happened. Does that mean I win every single trade? No, absolutely not, because there are times where, and I'm sure you all feel this as well. You're in a trade and you can kind of see it going both ways, and when you think back later on, you might say, well, I saw it both ways. Why would I even take that trade? Right. um, it happens, or maybe you miss it in the moment and you're just like, shit. You go back later on and you see it. Um, and from there, it makes a lot more sense after the fact. Of course, it's so much easier to look at this after the fact, but that's why I personally believe in anticipating rather than reacting. I think when you react, you have a much greater chance of being late and missing something and end up being caught with a bag than if you're anticipating the move, maybe buying it on candles that people don't typically want to buy it on. If you can justify it, if you can make sense out of it, right? So that low that we had on Nasdaq that I was just mentioning, this happened about 3, maybe 4 weeks ago at this point, but I I pinpoint targeted that low as the low that was going to turn us around, and I was able to justify it. So did I buy a call at that exact point and still hold on to it all the way up to this point? No, I don't swing trade like that. I like to scalp on the way up, right? So every day, me going into it with a bullish bias, telling myself, okay, where's the next straw on liquidity? Well, it's the next swing high. To me, that was fair enough. I can justify that. So me having that bullish mindset, trading that bullish trend, uh, more often than not, you're going to be right. And then it comes down to your execution, which is a conversation for another time, and it can be difficult, but that's what makes trading hard, even when you're good at it, or you feel like you can identify where price is going to go. So anyways, going back to Apple in this example, we do find a high and we do create a bearish imbalance to the downside. So you'll notice this big black candle right here, right? If we were to draw wick, and inside, you'll notice that there's no wicks on either side of this big black candle on the downside, right? So I would anticipate that the next time price got up into this level, we would get a rejection, which we did, right? You might be saying, why is this box black right now and not red? Well, the reason why I have it in black and not red is because this is also uh, a setup called a bearish breaker. And again, this might be a little more advanced for people who are just kind of looking into reading price for the first time, and that's okay. I'm going to keep it a little more brief on this. But if we look at, okay, we have a high, a low, and then a higher high. That next candle that takes out the low of that little price run, we're going to be viewing that candle as a newly found resistance level. And here, in confluence with this bearish imbalance that it also created, and it would look like this. I don't have it all on the chart because I don't like having it too clogged, but it will look like that. So you have a bearish weekly imbalance, and you also have a bearish breaker, and price gets up into it and rejects down lower. Okay. You might ask, why would price bounce here? That doesn't make any sense. Well, if we look onto our left, I bet you we can find a reason why. There is a bullish volume imbalance, right? So a gap up or gap down, we refer to those as bullish volume imbalances on a gap up. And for a gap down, we would view that as a bearish volume imbalance. All gaps are showing me is some sort of urgency to, if we gap up, go higher. If we gap down, go lower. And I use those levels as support and resistance if we were to get there. And actually, I shouldn't even say that. Maybe not support and resistance, but like a trampoline. I want price to get into it, and I want it to get out of it pretty quickly. Okay, so after that bounce, price gets back up into our breaker and into our weekly uh, um, bearish imbalance, and price rejects lower, taking out this swing low. Okay, so we look here, we're at 50% of the range, and we have a bullish imbalance right here. So if you look, let's look closely, just briefly. There it is. You have your wick, body, wick. Okay, here's your little bullish imbalance right here. No wicks on either side of this candle in this point. Boom, boom, take off. Okay, so that was the first attempt, right? So now we come back for seconds, and we'll notice that price holds. Look at that. Look at that body. It's beautiful, right? Wicks down gives you the heart attack, but we are looking at a weekly time frame, so we're going to want a weekly close below that until we invalidate that level, right? So then price bounces yet again, and we run into some trouble right here. Why do we run into trouble right here? Well, from this point, again, it can clog up your chart, and that's why I don't have it here. But this is a bearish order block right here. So an order block in this instance, a bearish one. You have a up close candle followed by a down close candle that overwhelms or takes the open of the previous, like we have here. Same thing up here. Up close candle, a down close candle that overwhelms the open. This would be a bearish order block, and that's kind of where we're chilling right now. We wicked into it last week. Um, but again, justification for every move that occurs on any chart, any time frame, you name it. It should always make sense. If it doesn't make sense, to me, that's a problem. All right. So as we continue on, you'll notice that again, remember our overarching trend here is bullish for the year, right? And as price retraces back down deeper into discount, we take out this low, higher time frame liquidity sweep, okay? Deeper into discount, holding on to this bullish imbalance for dear life, right? And we take off, right? So as we take off, you see this shaded box I have here. You'll notice that this is a bullish breaker. Like we have the bearish breaker here. A bearish breaker is high, low, higher high, and candle break down through. We would view this area as a future area of resistance. Now, if we flip it and we look at it from the bullish perspective, we're going to have a low, high, lower low. And when we take out the high of that high candle, we create a bullish breaker. So this area or this candle's range will be viewed at as support for the next time we get down here. Not quite yet. But remember, when we take out that high, what are we also doing in the process? Shifting market structure to bullish. So we're going to go from our low to our high. Okay. So what would we expect at this point? Well, there's two ways to look at this, and this is why it gets a little difficult when you're approaching that higher time frame liquidity. Did we take out a swing high? Yes, we did. Have we made a bullish imbalance? Very, very small, but guess what? We did right there. That's a gap up on the weekly from last week. So we gapped up and through previous buy side liquidity. And look at our weekly candle right here so far, holding on to it. So to me, I don't believe this range is set just yet. I believe that that move up to 198.23 is something that's going to happen. Is it going to happen today, tomorrow? I don't know, maybe. But if I'm looking at this from a weekly perspective, a higher time frame, I'm going to use that to drive the force. We can have red days in there, right? I'm sure within maybe not this price run exactly, but these green candles up, I'm sure there was a red day sprinkled in there somewhere, right? So again, we're looking at a higher time frame and trying to get an overall picture on how price is actually operating in this sense, right? So when we make this run, I still personally think we're going to come up here and sweep. And upon that sweep, again, lining up with NASDAQ, I think we take the high and I think we start to simmer down from that point and get back down into discount. Now, from this point, do we go higher into next year or do we just melt it? And, is that when the market crash that everyone's craving apparently happens? I don't know. We'll see. But this is, again, just kind of how I'm forecasting it for the next little bit. So I hope that was helpful. I'm just going to check some comments right now and see if anybody has anything. Let's see. Okay. We got room to 465 on SPY, maybe. That seems decent there. I'm looking in the group right now. Okay, yeah, Tesla. Sure, I can show you Tesla. All right, so if anybody has it, let's go. Sorry, I'm just popping into Twitter to make sure like the sound actually works on this thing. I hope it's good. I mean, I don't know. I guess we'll see. I got to get on that StreamYard because that's what I'm using right now, and it's cool because I can I guess invite other people to come up here and host with me and stuff. But I also want them recorded. So in order for me to record, I got to upgrade the account. So I'm going to do that if I make this a, weekly occurrence, but all right, enough of that. Let's go. Let's look at Tesla. We'll start out on the weekly on Tesla, and then we'll break it down into the daily because there are some staples of that Tesla daily that I think are pretty important to take a look at. So, all right. And here I have my range already set, and I've already got this one kind of charted. So let's take a look, and we'll notice that right now I have mapped out a current bullish trend. Why do I have a bullish trend? Well, we took out a couple sets of highs here. So, what was the price run that took out those sets of highs from this low? Why not down here? Well, we had a red candle in here, so I'm just going to go with the green. And the green to me makes pretty good sense. So we make that low, run it up to this high. Why do we reject here? Well, we do have a bearish order block right here. We look, right? Every move should be justified. And again, bearish order block, up close candle, followed by a down close that overwhelms the previous candle's open. So the open of this candle would be right here. The close of the next candle is down here. So we overwhelm, we are creating a bearish order block. So if I were to draw this bearish order block, it would look like this. I don't have it currently drawn, but it would look just like that. Okay. And you could see the precision. Where on this bearish order block do we reject? Right off 50%. You cannot tell me that an algorithm is not in charge of delivering price. I'm sorry. It's way too precise. Anyways, you know what? I'm going to leave that on there just because. And also, for anybody that's curious as to when I tweeted about this, and this is not a a bragging thing. I'm not trying to brag and say, "Ha, I told you guys all about Tesla 40 points ago." I'm just trying to show people that actually put in the time to learn how to do this. Like, you guys can all do it too. It's not, with time you get better at it, obviously, but I think it's very doable for a lot of people. So, anyways, we got our price run set. We know where we rejected off this bearish order block. Price retraces lower. Now, here's something that I think is pretty interesting, and I think anybody, whether you trade like me or you use different concepts, you've probably heard of the terminology or idea of previous support turning resistance. Now, we have that right here actually. So here's your bullish volume imbalance higher. We do run higher, from that gap up. It's 262 to 299. That's a pretty substantial move. That's 30 points, 37 points, pretty big deal. But the fact that after we do reach this high, do reach this 50% or midpoint of this bearish order block, we do reject, create a bearish order block. And the reason why I left this on is just to show you how perfect and precise this is, right? Look at that. Look where we rejected. Boom, right off of this previous support resistance, right? But also, if you want to say, oh, well, I would have deleted that, so I don't care. Okay, well, if you wanted a level here, you could just do this. Ready? Up, remember your idea of the bearish order block. Okay, here's an up close candle followed by a down close candle that overwhelms or takes over the open of the previous. There it is. Boom. Look where we reject off. 50%. Can't make it up. It's too precise, right? So anyways, we reject from this point, actually create another bearish order block in the process right down here, and we start to move pretty quickly. Bearish volume bounce, bearish volume bounce. Get down into discount. Where did this bounce come from, Mando? This is just Fibonacci trading. No, it's not. Ready? Here's a bullish volume imbalance. Right down in discount, right off that 62%, the start of the golden pocket. The start of the golden pocket is the 62% to 79% retracement on a bullish price trend. There it is. And boom, run it back up. Where do we reject? Bearish order block, 50% of that bearish order block, in fact, and create another order block in the process, and also create a bearish imbalance right here. Okay, now you want to see how precise and how beautiful looking at this on a higher time frame really is. There's your bearish imbalance right here, right? No wicks on either side of that candle. Fair, fair. Price then retraces back up. Why do we bounce here, Mando? What the hell? It's random, right? Not really. Bullish volume imbalance. Right there. Price bounce from here. Right up back into where? That bearish imbalance. Look how perfect it is. Right to the high. Can't tell me that this stuff is random. I'm sorry. It just ain't. So anyways, next week you get a little bit more of a high wick back into that order block. Price does not close above either this this bearish imbalance or the bearish order block, and price rejects lower yet again. Second attempt, melter right down and through, and we continue on. Price gets deeper into discount, taking out this bullish imbalance that we bounced from in the first attempt. So we also made a volume imbalance down through. That's an example of where we take out liquidity on the higher time frame and continue going. Right? Remember, what did we say? An imbalance will tip the market's hand, right? Is this one long lived? No. But did we continue down quite a bit from that point? Yeah. Look, after taking out that liquidity, we made a bearish volume imbalance. So from that point at 212, we ended up going down below, what is this, 194? Yeah. We ended up going down to 194. That's 18 points. Pretty substantial amount of points, right? So again, what was the market tipping its hand? It was that bearish volume imbalance to the downside. So anyways, we get even deeper into discount and we get into yet again another bullish imbalance right down here in discount at that 79% retracement, sweeping that low right here. You see us take out that low, boom, there it is, right into that bullish volume imbalance in discount. And here's where the Mando model comes into play. You have your low, high, retracement into discount, and the expectation from this point. Are there some levels of resistance above? Absolutely. But what would be the completion, or what's the anticipation for the completion of this model? And in Tesla's case, it's 299.29. Is that going to happen tomorrow? I doubt it. Is it going to happen in a week from now? I don't know, maybe. But remember, the overall expectation from this point is that we will sweep that 299.29 on Tesla. And that's why I'm holding my shares, and I have a swing open on Tesla. So I'm still pretty bullish on Tesla. Now, look, we still have to fill up this imbalance right here. 250.22 is that mark that I'd like to see us get over. We have this bearish imbalance, but if we take a look at that bearish imbalance, what did we do already? We filled it. We got all the way up to it, up through it, and rejected from there. But we've already filled this. So I'm anticipating that not causing too much issue for us. So upon completion here, I really want to see us close up above this 250.22 level. And if we can do that, I feel pretty good about that. So that's my idea on Tesla, really. Does anybody have any questions about that? Just gonna, leave the floor open. And I also want to see if there were comments left or anything on here. So this 250.22 level, if we can do that, I feel pretty good about that. So all right, so there's a little lag that's funny. So we did Apple, we did Tesla. If anybody has any requests, please feel free to do so. But I'm only going to go on for a couple more minutes here, so that's why if you have you know any requests, please feel free. But Nvidia, again, very similarly, we completed the Mando model with this move higher, so I have my fib set here to here. A very similar situation in that, if I were to draw the fibs again on Nvidia from your low to your high, we're getting into discount and we're sweeping liquidity, taking out a higher time frame low. And by doing that, the anticipation at that point would be some sort of imbalance forming. And in this case, we swept the low. We did something called turtle soup, just poke our head just below it, and we take off. So, oh, okay, cool. Coinbase, for sure. Coinbase actually just finished up my model. So let's take a look. Ready? Right here. It's actually well above what I guess you could say the forecast for my model, but it's a-okay. So let's take a look. Okay, should be loading up. I might not have actually charged on the weekly. That's fine. Good, even better. All right, so oh yeah, I did. Whoops. Okay. Well, we can go back to Coinbase all the way down to here if you want. I'll do it really quickly actually. Ready? So, oh, whoops. Just to show you guys, like, and this was actually the example that I used on that weekend long short that I do on Saturdays. But okay, ready? Let's zoom over right here. did we take out a high in this price run? Yeah, we did. So taking out that high right there, that would lead me to believe we have a bullish market structure or a bullish trend, right? So from that point, we have our low to our high. We have our discount retracement. Does it take forever? Absolutely, yeah, it does. It took a while in this situation, but guess what? It never disrespected any of our um, setup or PD array in this case. So ready? We have that bullish imbalance gap up. We also have this bullish imbalance, and this imbalance is in the form of a fair value gap. So you'll notice that each time as we're coming lower, we're just sweeping lows, taking more liquidity, more liquidity, more liquidity. And you might say, well, how is this helpful, right? How can I trade this if it's going to keep bouncing around for a while? Well, one, I would tell you that I think swing trading options without grabbing something much farther out on like some sort of leap situation, you're really kind of playing with fire because theta is it's gonna be a problem more often than not. You can get if that move is not immediate to where it gets to your target by the end, it's the contract's not going to look as good as it should to you, right? So that's why I personally like swing trading shares. I mean, even if it's not as many shares as what I can buy in options contracts, I like to do it that way because um, you can kind of clean up. And again, it might take a while, but you're not fighting the clock, so you're not dealing with that theta burn that could occur on your contract. But if you are to take some sort of options contract, I mean, like going far out to me is like the best way to think about it. Yes, the contracts are more expensive, so that makes it a little more difficult for some people. It happens, um, but anyways, you'll see we retrace back down this time into the first imbalance right off that 62% golden pocket, and we do make a run. Now you might say, okay, Mando, well, why do we reject here? If we're to crunch this down and we go back to some sort of daily level, I can guarantee that we're going to find something. But to keep this brief and short, um, you can maybe go on your own right now and look, and I bet you there's some sort of either a bearish volume imbalance or bearish um, fair value gap on the downside here in the daily time frame, right? So price retraces yet again. We get a little bit deeper to the high of this right off that 70%, and we bounce again, right? Price rejects here, bearish order block, okay? Up close candle followed by a down close candle that overwhelms the previous candle, and we reject. And on that third and final attempt, we get deeper down into this bullish imbalance down here in discount, and we absolutely take off. So completion of the model would be at $87. Model complete. Okay, now what, right? Okay, so now that we made another bullish trend or bullish market structure shift, why would I say that? Well, we took out highs in the process. So by taking out those highs, to me, we are in a bullish market structure. So from our low here to our high, I have my fib range set. Now, again, this isn't the best example, but there are situations where we slowly keep on reaching, keep on reaching, keep on reaching. So you might say, well, I want to short this because look, there's a huge range. I could have made a shit ton of money off that 114 all the way down to, discount where I'm expecting price to go. What could I use? So to me, in a bullish trend, I don't really look to short anything until I get some sort of bearish volume imbalance or bearish fair value gap or bearish order block form to look short. And in this case, we have a bearish volume imbalance. This is the market tipping its hand. The gap down is just showing me or telling me without really telling me there's some urgency to go lower from this point, right? So once we got that bearish volume imbalance, look, candle closes, we reach back up into it. Look at that. Next candle, dump. Okay. Get into discount of this newfound range. We made some imbalances in the process, right? Fair. And get into it. Bounce. Why do we reject here, Mando? Bearish fair value gap right here. Rejection. Sweep the low. Okay. Swept the low. What do we do when we sweep lows? Take liquidity, more money. Liquidity is money. Money makes this thing go round. Okay. So without it, um, price ain't moving. You need money to move price. So following that sweep, move higher yet again. Why are we rejecting here? What the heck? Weekly bearish order block, up close candle followed by a down close candle that overwhelms the previous, and we get right back down into discount one more time for the rocket ride. Okay, So what could tell you that we're actually going to continue moving higher? Well, did we take any highs here? Yeah, we took out this one, this one, this one. Okay, so how can we tell that this is going to be a continuation rather than just a sweep and retracement? Did we make some sort of bullish imbalance in the process? Boom, boom, right here. Bullish volume imbalance higher. That's the market tipping its hand, telling you, I want to go higher. I want to find liquidity up. Okay. And clearly it does so. So obviously we had that bearish volume imbalance, but look how interesting this is. Sorry, I deleted it early. Ready? Okay. It should be red, but look what happens. We gap above it, right? So we made a bullish imbalance through that previous bearish imbalance. So to me, it is as good as gone. And remember, in that bullish price range, I'm not really looking to short when we've already gotten into discount, specifically a discount bullish imbalance. And I don't know if I really got too deeply into this, but a discount of a range would be below 50% in a bullish range. So discount for your longs, right? 50% would be fair price or equilibrium, right? So below that, you're getting a discount, right? That's the way that smart money would view that. But if you're buying calls up here, you're overpaying essentially, right? And it would make sense. Look, you're buying calls up here, right? Off of this. What we have some inefficiencies or discount imbalances below that. Again, if you use this model or use any of these concepts, you're going to notice that more often than not, we like to come back down into discount. So, anyways, we take off multiple volume imbalances in the process here, up and through liquidity. So once we get up and through this liquidity, right, one of two things can happen. Obviously, we can either get that bullish volume imbalance or bullish imbalance higher, or we can get that bullish imbalance lower. Well, in this situation right here, we have a bullish volume imbalance and a bullish fair value gap to the upside, sweeping this high and creating some sort of continuation. Now, let's look even higher on this time frame just to see where price might stop, and I see it right already, right here. Okay, so here would be the first area where I'm looking for price to run into some trouble. Did we fill it? Yes, we've already filled it, but we've had a pretty substantial run here, so some sort of retracement at this point wouldn't seem too ludicrous. So the first level that I'd be looking for some sort of rejection or pullback is at 131. Now, again, in this current situation, am I just going to set an order for puts at that point? No, I'm not. I would like to see some sort of bearish imbalance down to confirm that we are actually going to start moving down from this point. Right? I don't want to just try and front run it. Getting that extra layer of confirmation, especially on the higher time frame, really to me clears things up quite a bit. Um, so we have that level there. We also have another bearish volume imbalance up here on coin right there. Boom, boom. And that's all the way up at 145. And then we got another one right up here. And that's kind of where I'm going to leave it at for right now. And that's up to 156. Something that I look at to use coin, and this is probably going to be my last unless anybody shoots me a request or something here for a different chart. But I also like to look at Bitcoin just in general, especially when you look at a miner or something like that. And, to back that thesis of higher prices on Coinbase, I also felt like Bitcoin was going to go higher. So if you'll go back about 3 weeks ago, I had tweeted that I'm anticipating price on Bitcoin to move to 42,240. And if you don't believe me, go to the search bar and go at Mando Trading and the money sign BTC. All my tweets about it's going to come up. So you'll be able to see it. And that goes for any of these. Tesla, I urge you to do so. And again, any of them, do it. That's why I put it in writing. But, and some guy, he tried to say that it wasn't real. So I told him, I let him in on the secret that I can actually go back in time and tweet things. I have that ability. I was blessed. So, but anyways, going to Bitcoin, yes, we have a bearish imbalance here, but why wouldn't this be an imbalance that I'm looking to actually short? And, for people who have been in the group for a while, I bet you they can tell you, you're not looking to short this because we're in premium. We're overpaying for our shorts here, right? We want to see price get into discount. And from that point, we would feel much more comfortable about price projecting from there, right? And here's just a perfect example of it. We churn our way up and through this level. Weekly close still is 4 days, so I don't want to get too far ahead of myself. Price can very easily reject from this point, but to me, I don't think so. I think we move up to that 42,240. Um, and from there, I think price will retrace lower. So that kind of does line up with Coinbase moving just a tad bit higher, but just that idea in itself lined up well with the whole Bitcoin situation. I thought Bitcoin was going to move higher, so it lined up with Coin performing that Mando model to completion, and it played out pretty good. So, um, and you might say, okay, like why is this a bearish range? Well, did we take out a higher low in this current price run? Took out a low right here. If we crunch this and we look at a smaller time frame and we say, okay, well, from this point here, right? Uh, let's just say we want to look at it from a tight window. We can say, okay, well, here is your ready. All right, let's use the first one just so you can see how often this repeats. Okay, ready? Uh, okay, did we take out highs in this price run? Yep, we did. We took out 1, 2, 3. There it is. Boom. Where do we get into? Below 50%. So that is a discount. Bullish imbalance right here. Ready? Oh, no, not that. I want the rectangle. Whoops. Right here. Come on. There it is. Discount bullish imbalance. Bing, bing. Shoo. Model complete. Mando model number 1 complete. Okay, now, well, we took out another high here. So let's bring our swing low. Okay, obviously we got to wait for a high to be set. What in this case told you that price was going to actually start to move down towards discount? We got a bearish order block. Up close candle followed by a down close candle that overwhelms the previous candle's open. Boom. Done. Up close candle followed by a down close candle that overwhelms the open of the previous. Check. Bearish order block. Price retraces lower. Where does it get into? Okay. I see you. I see you there, Mando. Nice. Boom. Discount. Bullish imbalance. And we're going to get a tricky one, but it's good. There it is. Boom. Took off. Take out the highs. Very nice. Very nice. Very nice. Okay. So now we go to our next one right here. Doo-doo. Okay. This one's tricky and almost got us. Almost. Not quite. But ready. Let's take a look. We have our low to our high. We have our discount retracement right here. And we are so close to sweeping that low. And if we were to sweep that low in this situation, I'm saying I'm bearish. Sorry, we shifted market structure bearish. Even if we bounce here, I'd be looking to short that bearish fair value gap right there. But guess what? We didn't sweep that low. That's why our stop losses go below the low. And if it goes below the low, we know take the stop, take the loss. It's okay. It's always well defined. There's always a well defined trade set up within, just using the criteria of this specific model. So price gets into it, holds on to that 0.79 for dear life. You have your bullish imbalance right on down here, right? The previous one. And take off, baby. There it is. And Mando model complete yet again. Now let's slide this up and over. Okay. Boom, boom. And there, this is what we're working with right now. We have our low to our high. Why did I use that as my range for my fibs? Well, here's a high that's taken out. Here's a high that's taken out. What was the price run that took out those highs? I'm using this one currently. Could I also use this one? Absolutely. Makes it even actually a little more precise. I'm gonna stick with this one right here. Reason why, we have a down close candle right here, and this creates a bullish order block. So on the inverse of what we've talked about multiple times tonight, here's a down close candle followed by an up close candle that overwhelms the open of the previous. So there's your bullish order block right there. So we make our way higher, right? Look, you might say, okay, we got into resistance here. I want to short this. Nope. I'm gonna short this again. I'm gonna give it another shot. We're at 50%. Nope. Oh, I'm gonna give it one more try. We just filled it. Nope, nope, nope. Right? That's why I like to wait for a bearish imbalance to the downside to actually confirm that we are going to start moving lower. Until I get that, I'm not interested in shorting it. Right? And I know we're using the weekly as an example right here, but this is what I use on a 5-minute time frame, a 15-minute time frame, a 30-minute time frame, hourly, daily, you name it. This is it. This is the model. So if you want more clarity or a little more in-depth analysis and some, I guess, a slower way to get into it, you can absolutely check out that on YouTube. Can I do IWM? Yeah, absolutely. We actually looked at IWM with when was it? Last night? Yeah, it was last night. We looked at IWM last night because it was. Hold on, sorry, I just got a text. Okay, good. Yeah, we looked at IWM last night with Kale in the live stream. She was peeking at it, but when was it? Last night. Oops. Sorry, I just keep poking it to make sure the volume works. Hopefully this is smooth. I mean, this is pretty cool. But anyways, what we're looking at IWM. All right. I don't know. I forget if I charted on the weekly or the daily. Either way, we'll do it. Um, but if you take anything away from tonight, it's not you must use my concepts, you must use my ideas, you must do this, do this. No, every move should be justified. And if you're using a strategy that cannot justify every move, I think that's problematic. I know you might say, oh, well, nobody knows. There's no way. I promise you, if you can pull up any chart right now, I can give you an explanation as to why something occurred, right? And I know I gave out of 10 examples that I showed you tonight, I gave you 9 realistic ones, and I gave you one that you might say, oh, it's bullshit. If we were to go back down into a daily time frame, I can guarantee I can find you a reason as to why I would have rejected there. So I just didn't feel like wasting time going back on it. But all right, let's get into IWM, and then I'm calling it quits. So this was a request from Dean. So let's take a look. I do have this charted on a much higher, much higher time frame. Okay. So let me just remove the most recent, just to clear things up really quickly. We'll put it back on in a sec. But okay, I have my range set from this low all the way up to whatever the high was. Pretty high. Right? Why would I use that run? Well, what was the price run that took out this high? From this low down to that high, or up to that high, I should say. And you get your retracement down. Bloop. Bullish imbalance and discount. Check. Right. And again, all of these little bounces, I can guarantee. I'm going to do it anyways. I'll be annoying. Ready? Give you every single one. Ready? Okay. Ready? Price gets up into here. What is our confirmation that we are actually going to start moving lower from this point? Well, did we get an imbalance here? Nope. 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 Boom. Yeah, we got one right here. Okay. Ready? Very small, but imbalanced nonetheless. Look what happens the first time we get into it. Reject. Okay. Then you might say, okay, well, why do we hold here? Well, you have a bullish fair value gap right here, and you have a bullish order block. Down close candle followed by an up close candle that overwhelms the opening or of the previous candle. Boom, right there. Gone. Takes off. Okay. So I'll get rid of those just for now because I want to keep this clean so you guys can see it. Price continues to run higher, and boom, we run into something here. If we go left, I'm sure we can find something. If it is an all-time high, flip a coin. Sorry, I haven't yet discovered, how to pinpoint what the all-time high is going to be because I don't have any information to my left. Maybe it's some sort of standard deviation. I don't know, whatever it is. I've yet to find it. So if you found it, then good, that's great. So what would tell you here that we're actually going to start moving down? Have we created some sort of bearish imbalance? Yep, right here. Boom. There it is. There's the market tipping its hand. We are going lower from this point, and lower we go. Okay. Why do we bounce here? Okay. Well, we've taken multiple swing lows in the process. Okay. This one in particular. Ready? Right here. Boom. But also, okay, so we took that low. Yeah, that's all it takes. Liquidity is everything right here. Took it. Look left. What else do we have here? Bullish order block. We have a down close candle followed by an up close candle that overtakes the previous candle's open. So order blocks on the higher time frame are so king. I love using them. Do I use them on the smaller time frame? Not as much. I got to be honest, I don't. Sorry, one sec. But the reason why I use them on the higher time frame more than the lower is because think about it. In an order block, really it's just think about how many orders that are occurring within a specific candle. And on a weekly time frame, there's I would there's never it's just not possible for there to be more orders within a 5 minute candle than there would be on an hourly, daily, weekly, right? Monthly, whatever. Um So, anyways, we get up into, I'm sorry, where were we? Oh, swept liquidity, got into that bullish order block. One more bounce, bounce up here. Okay, we're gonna go higher again. Not so fast. What do we create here? Bearish order block. There it is. Look at, I'm sorry, not bearish order block. Oh, sorry, bearish imbalance and an imbalance in the form of a fair value gap. Look, no wicks on either side of that candle. Right? Look at that. You can't tell me this is not an algorithm delivering price. It is way too precise. It's not possible. I'm sorry. You can believe that all you want. I'm not in the camp of believing that, and nothing is going to show me otherwise. And it's just I'm sorry. It's clear as day right here. Boom. There's another rejection. Down through liquidity. Okay, we took out lows, right? What's going to tip the market's hand and tell us, oh, we're going to continue lower? Bullish volume imbalance. Gap down. That's showing us urgency to move lower. Okay. So after that rejection, obviously we take out swing low, blah, blah, blah. We come down here. That purple line is a dark pool print from a while ago, which would make sense because what is this right here? A bullish order block, right? So if you're ever curious, you go and see somebody posting about dark pool prints after market, look how it paints the candle. The candle paints like this, where it's a down close followed by an up close that takes out previous day's high. You have a bullish dark pool buy, right? Or vice versa, right? Not many people know that, but that's I actually found that out myself. I didn't even use ICT concepts. So, um, but anyways, I'm sorry. Whoops. We continue lower, make an imbalance down and through. Okay, ready. Let's come right over here and let's do this. Ready? What is this right here? Bearish imbalance. No wicks on either side of that down close candle. Okay, and price continues lower. Now, what do we get into here? Why would we bounce here, Mando? Come on. There is a bullish volume imbalance right here. There it is. Wicks in, takes off. Again, every move can be justified. Every single move. Oh shit, I clicked off of it. Sorry, it'll come back. Hold on. Every move can be justified. I promise you. I'm not trying to bullshit you on that. If you can pull one up and I don't get it, I'll I don't know, give you a free lifetime membership. But okay, anyways. Price bounces here. What do we get into and reject here? Bullet bearish imbalance. So we're going candle for candle here. Just keep that in mind. Rejection, back down lower. Holds on to this bullish imbalance yet again. We swept lower and we took out liquidity here. But what else do we have right here on this lower sweep? We have a bullish fair value gap. Let's zoom in just in case you don't believe me. Look, no wicks on either side of that candle, right? Bullish imbalance. Bounce yet again. Price runs one more time. We get up into that imbalance. We reject one more time, get back down into the imbalance, bounce again. Look at this ping pong. And we get up into this imbalance. We fill it. Nice. But then look what we do. We wick right into this bearish imbalance right here. And hold on, just in case anybody wants to see. All right, well, where's the Mando model? Okay. Bearish trend. Why? We took out lows. Did we not? Yep, we did. High to low. There's your retracement back up into discount. Rejection. There it is one more time. 0.62, bearish imbalance, rejection, melt lower. Mando model complete. See how often this repeats? You can do this on any chart. Any chart. Don't matter. Okay? Okay. What's going to tell us here that we're going to continue lower? Bearish volume imbalance lower. Beautiful. There it is. And a bearish order block is created right here. Let's keep that in mind for later. We also have a bearish imbalance. Very small, but we still have it right there. Okay. There it is. Okay. We continue on. Price retraces all the way back down into discount at that 0.79 retracement. We sweep that low. Keep that in mind. We swept the low right here. And we bounce. Whoa, we bounced quite a bit here. Damn, that's pretty impressive, no? Yep, for sure. We made a serious move here. up into here. Boom, we reject. What did we reject? Remember that purple line? What did we say that was? Order block. Also, let's look left. We have another new order block. Up close candle followed by a down close candle that overwhelms or overtakes the previous candle's open. Ready? There it is. Aha, there it is, right? I don't have that on the chart, but there it is. And I bet you if we were to go down into a daily time frame, we would see something even more precise in terms of a bearish fair value gap, bearish volume imbalance, you name it. But in this situation here, you have your uh, order block that trumps it. Okay. So then price retraces lower, shows us that bearish volume imbalance down, shows us that there is some urgency to move lower. Okay. Here we go. What do we do in this process right here? We hold on to that bullish imbalance down in discount, but we also sweep this low, right? And remember, we sweep higher time frame lows. What are one of two things are going to happen? We're either going to get that bearish imbalance to the downside to show that's the market telling us we are going to continue lower. But if we sweep that low and we make an imbalance up higher, what does that tell us? Reversal. Boom. What do? Sweep that low, bullish imbalance right here. Bang. There it is. And just for now, I'm going to delete this. You see how accurate this little box is here, but I'm going to remove it just for optics so you guys can see more clearly. Okay, we swept that low. Price moves higher. We create a bullish imbalance off of that, just like we did on NASDAQ right here. I know it's obviously not lining up in time, but the similar type of move. So there's your bullish imbalance. Okay, so price continues to run higher, and we're running into some trouble right here. How can we justify us running into trouble right here? Well, we have a bearish order block, up close candle, followed by a down close candle that overwhelms the open of the previous. We also have right here bearish imbalance, bearish volume imbalance down, I should say, gap down. Price gets up into it, rejects, price retraces lower, gets down into here. Wow, Mando, you're stumped. You can't tell me why we bounced here. Well, to be fair, if we were to go back a little bit, this is more than enough to justify it. Sorry, I'm clicking back more, just so you see that green box. There is a bullish imbalance still here. But also, now let me just fast forward just to get what we had back on here. Oh, dang, it's not going to do all of them. All right, that's okay. Well, I'll do it anyways. Ready? Green. Ah, we have another bullish imbalance here. Can't stump me just yet. Can't do it. There it is. Here's your bearish price right here. Hold on. There's your red box. Okay. Price rejects, moves lower. Okay. And we get down into this bullish volume imbalance right here. From this point, price makes its move higher, taking out this bearish imbalance on the second attempt, which seems reasonable, right? And we also did make a bullish imbalance up and through. That's fine. Price retraces back up into here. Oh man, here it is. Ready? There's volume imbalance right here. Wow, look at that. We got above it though, right? We also have, again, just for accuracy purposes, I want to show you that every move can be justified. Bearish order block right here that we rejected the first time. Same one, just lower. I bet you if we crunch into this week, August 15th, you're going to see that on a daily time frame, hourly time frame, you will be able to see a bearish imbalance that occurs in this specific region. But anyways, price rejects lower, makes its move down. We get back down into this bullish imbalance, and we also swept liquidity, right? So by sweeping liquidity, remember one of two things are going to happen. And obviously, we see price is going to bounce from this point. We bounce higher, get up into this high. Did we take out the high? Nope, we did not. We reject this. Not only is this a bearish order block, but also a bearish imbalance from dating back to April. Right here, right here. Okay, price rejects. Keep on moving down into this area. Here's your imbalance to show us that we actually want to go lower, right? Why do we bounce here? Bullish order block and bullish fair value gap. In fact, we have both, right? There's your bullish fair value gap right there. There it is, green box. There, held it. There it again. Bounce, rejection, down and through, imbalance, showing us that we do want to go lower, okay? But we also have that order block, down close, up close, that overwhelms the open. And we continue on. Here's a bearish imbalance that we just created right here. Price moves on lower, takes out this level after multiple tests and um, bounces from. Same thing here. We've bounced multiple times in this level. Finally, we get that down close. And you'll notice here, what do? Sweep liquidity, create some sort of imbalance higher right here. Oh, no bullish imbalance, no bullish volume imbalance, but what do we have? Down close candle followed by an up close candle that overwhelms or overtakes the previous open or of that candle. And there's your bullish order block. You have another bullish order block here. So you might say to yourself, okay, well, right now in this immediate price run, we are bearish, right? And I would say, yes, that's fair. Fair to say. In this most immediate price swing, and I'm going to use this. Oh, hold on. Let's just do a couple Mando models in the process. Ready? High to low. Took out this low right here. Retracement up into where? Discount of your bearish price range. Price rejects lower. Mando model complete. Okay, so that's one. Ready? Let's go round two. Do we get a round two here? Down. Okay. We're currently in the round two. Okay. Here it is. Bearish price run. Why? We took out lows in the process. Price retraces back up into discount of that bearish range. Right. Okay. And what do we do so far? Reject. Right. Now, at some point or another, there is going to be an instance where the Mando model doesn't work. Can't always work. If it always worked, the market would go in one direction and would only go in one direction. And we all know that's not the case. So in this particular instance, why would I favor price actually moving higher and shifting market structure back bullish for IWM? Well, could we reject from this point? Absolutely. Just let me put that on the record. We could absolutely reject from this point. So if you ask me what's your bias on IWM right now, I would say I'm pretty neutral. I would like to see price close above this bearish imbalance before I did anything, and at 182.39. But even if you wanted to say, all right, this is a bearish market structure. I know the Mando model. I'm going to take a swing at this thing. Your entry is the bearish imbalance right here. So it starts at 179.16. And your stop out is a candle close above the high of the candle that created that bearish imbalance down. So 183.73. So realistically, you're risking what, like $6 to potentially make what is 179 down to 161. $7 to make about 17. Does that risk reward add up to you? Everybody's different. It might make sense to you, it might not. And that's okay. But that's something that you would consider, right? I personally am bearish. I'm not bearish. I'm sorry. I'm neutral in this situation because while I can totally see this rejecting heading down towards lows and completing the Mando model, I'm going to give you a bullish perspective. And this is what the Furus on Twitter do. They give you both sides of the story and they pick one. And that's a lot of trading, really. You can give both sides of the story pretty often. And you can make a claim and make a case as to why one would make sense and one wouldn't. And people wouldn't even bat an eye. It would be like, oh, okay, yeah, that totally makes sense. But from the bullish perspective, we took out higher time frame liquidity while getting deeper into a discount bullish imbalance, which we had right down here, and a discount bullish order block all the way dating back to November of 2020, right? We have a bullish trend on the overarching, um, you know, uh, just the overarching trend. If we're going to look at a higher time frame, you know, looking years out, this is a bullish trend. It is, right? And when we crunch the time, the medium term, the short term, it could be bearish, but overall, we're bullish. Market tends to go up over time, right? But we've swept multiple pools of liquidity. We have a bullish order block back there. We have a bullish volume imbalance, and we are at 79% or deep into discount of this bullish price run. We've created one order block. We've created two order blocks in the process, and we've also created a bullish imbalance right here, right here. So, in conclusion, um, I'm neutral on IWM. I think I would actually favor upside on IWM, believe it or not. Could I be wrong? Sure. But again, the way that I would play this, it would be quite structured in that what would be my risk reward on this? Well, I would be looking to grab an entry off of 176. I would have my stop loss at the low of this candle at 167. So I'd be risking about $9. But for the potential win of a sweep at 191. So risking 9 to make 19 sounds reasonable to me. I would, you might say, nah, it's not enough, but to me, it's all right. So I hope that was helpful on IWM. I know it's long-winded, but again, if you can take one thing out of this entire night and this entire session, bullish imbalance almost filled. I'm not exactly sure, Kidney MD, which one you're talking about there, but um, oh, on SPY, yeah, yep. So on that SPY chart that you're seeing there, I'm personally looking for a sweep of those highs, just like on Nasdaq. But again, at the end of the day, every move to me should be able to be justified, and if it's not, I think that is a problem. So um, I hope this was insightful to everyone who watched. And if it was great, I think I'm gonna do these more as long as if I can go back and see that it all worked out and the volume was good, sound and everything like that. I want to confirm with some people who are in the group who are here right now. Um, but yeah, so that's all I got for now. So thanks for sticking around. No problem, Deem. I hope this was insightful to you, and I'll catch you all next time. So.